In the ever-churning maelstrom of the financial markets, whispers of extraordinary returns invariably pique investor curiosity. The recent emergence of the aptly named triple leverage 12-week yield ETF, TLTW, has done just that, igniting heated debates across investment forums and generating headlines that scream 15% monthly dividends. Too good to be true? Before diving headfirst into the tantalizing allure of TLTW, a discerning investor must exercise due diligence. Unveiling the layers behind this seemingly outlandish proposition necessitates a deep dive into its underlying mechanics, potential pitfalls, and a sober assessment of the dream ETF narrative. TLTW, a closer look. TLTW, launched in late 2023, promises a staggering 15% monthly dividend, an almost mythical figure in the realm of conventional ETFs. It achieves this seemingly impossible feat by employing a complex strategy rooted in leverage and options contracts. At its core, TLTW utilizes a leveraged position on a basket of high-volatility, short-dated options contracts. These options, primarily focused on indices like the S&P 500 and Nasdaq 100, amplify potential gains and losses by a predetermined factor, often exceeding 3x. The rationale behind this aggressive approach is to generate substantial income through the theta decay inherent in short-dated options. Theta decay refers to the natural decrease in an option's value as it approaches its expiry date. By continuously rolling these options contracts as they near expiry, TLTW aims to capture this recurring income stream and distribute it as monthly dividends. The allure and the peril. The prospect of consistently pocketing 15% monthly returns is undeniably alluring. For income-seeking investors, TLTW presents a seemingly unparalleled opportunity to generate sizable passive income. This newfound financial freedom fuels the dream ETF narrative, attracting investors searching for an escape from the drudgery of traditional income-generating avenues. However, beneath the shiny veneer of seemingly guaranteed returns lies a labyrinth of potential perils. Investors must exercise extreme caution before venturing into the uncharted territory of TLTW. Dissecting the risks. Volatility magnification, leverage, while amplifying potential gains, also amplifies losses to an equal degree. A minor dip in the underlying asset prices can lead to devastating losses for TLTW due to its leveraged position. This volatility magnification can quickly erase months' worth of accumulated dividends and plunge investors into significant losses. Options decay and expiry costs. Short-dated options, the cornerstone of TLTW's strategy, are prone to rapid decay in value as their expiry date approaches. This inherent decay poses a constant drag on the ETF's performance, necessitating frequent rolling of contracts and incurring associated transaction costs. These costs can eat into the promised 15% dividend, potentially shrinking it and eroding returns over time. Liquidity concerns. TLTW, being a relatively new and niche ETF, faces limited trading volume. This low liquidity can make it challenging to enter or exit positions at desirable prices, amplifying the risks associated with market volatility. A sudden influx of selling pressure could lead to significant price swings, further exacerbating losses for investors. Complexity and transparency. The intricate web of leverage and options contracts employed by TLTW necessitates a deep understanding of these instruments and their intricate interplay. For many retail investors, deciphering the underlying mechanics of TLTW can be a daunting task, potentially leading to uninformed investment decisions. Additionally, the ETF's prospectus and marketing materials may not adequately disclose all the inherent risks and complexities, placing the onus on investors to conduct thorough due diligence. Sustainability and long-term viability. the long-term sustainability of TLTW's strategy remains a hotly debated topic. While the strategy may generate impressive returns in a bull market, its performance during prolonged periods of market downturns is a significant concern. The compounding effect of leverage and decaying options contracts could quickly erode capital and wipe out gains accumulated during bullish periods. Key takeaways. TLTW's 15% monthly dividend is not risk-free. Leverage, options decay, and market volatility pose significant threats. Investors should thoroughly understand the complex mechanics of TLTW before considering it. TLTW is best suited for sophisticated investors with a high risk tolerance, not retail investors seeking a stable income source. Diversification within a long-term investment strategy remains crucial, regardless of the allure of seemingly high returns. Ultimately, the decision of whether or not to invest in TLTW rests with each individual investor. But before succumbing to the siren song of dream returns, a clear-eyed assessment of the risks and a commitment to responsible investing are essential. Remember, the financial markets are a battlefield, not a playground. Entering the fray with caution and a well-developed battle plan is the only way to navigate the treacherous terrain and emerge victorious. Alternative investments for income. Beyond the high-risk world of leveraged ETFs, numerous investment options can cater to income-seeking investors. Dividend-paying stocks. Investing in reputable companies with established track records of dividend payouts offers a reliable income stream. Look for companies with sustainable business models, strong cash flows, and consistent dividend growth. Dividend-focused funds. Diversified funds that invest in a basket of dividend-paying stocks can provide broader exposure and mitigate individual company risk. Choose funds with low expense ratios and a proven track record of consistent dividend distributions. Bonds. Fixed income investments like bonds offer regular interest payments, providing a predictable income stream. Government bonds tend to be less volatile than corporate bonds, but offer lower yields. REITs. Real estate investment trusts own and operate income-producing properties, distributing a portion of their rental income to shareholders. REITs offer exposure to the real estate market without the hassle of direct ownership. Remember, every investment carries its own set of risks and rewards. Carefully consider your individual needs, risk tolerance, and financial goals before making any investment decisions. Consult with a qualified financial advisor if necessary to develop a personalized investment plan that aligns with your long-term objectives. By approaching investing with a healthy dose of skepticism, thorough research, and a responsible approach, you can navigate the market's complexities and make informed decisions that lead to financial success.